These are 6 top stocks in after hours with big percentage gains today. Our review on SVRE. Saverone 2014 Ltd is an Israeli-based technology company that's tackling a very real and growing issue on the roads: distracted driving due to mobile phone use. Their system is designed to locate phones inside the vehicle and restrict the use of distracting apps on the driver's device, without interfering with passengers. What's unique here is that their tech is tailored for 3 different vehicle types: private cars, trucks, and buses. They're already selling the Saverone 0.1 system in Israel and are also aiming at 2 big markets: the aftermarket, which retrofits vehicles already on the road, and the OEM segment, where their technology gets built right into the assembly line of new vehicles. Now, let's talk about the stock. Shares of Saverone absolutely exploded after hours, up 64%, with a breakout of 70% right at the start of the after-hours session. That kind of move definitely turns heads. But what's even more intriguing is that there wasn't any headline or press release driving the spike. No deal announcement, no earnings update, just a sudden and aggressive surge in trading. That raises the possibility that this move might be speculative in nature, or perhaps some investors are anticipating something behind the scenes, like a partnership, regulatory milestone, or an international expansion. From an investor's lens, this is one of those setups where the business story is solid, addressing a critical safety issue with tech that has both commercial and regulatory appeal, but the price action may be getting ahead of the news. When you see a breakout like that in after hours without a clear catalyst, it's always smart to tread carefully. Volatility can cut both ways. That said, it's a company worth keeping on your radar. If Saverone can land a major OEM partnership or start expanding beyond Israel, that could be a real game changer. But until we see that confirmation, staying grounded is key, even if the market's clearly getting excited. Our review on GLXG. Galaxy Payroll Group Ltd is a holding company that specializes in payroll outsourcing services. Basically, they handle all the back-office stuff like salary calculations, income tax, and housing provident fund contributions, making life easier for businesses that want to offload the more technical and compliance-heavy parts of HR. On top of that, they offer employment services, consulting, and market research, which gives them a broader footprint in the enterprise services space. It's not the kind of company that usually makes headlines, but it plays an important role in keeping businesses running smoothly behind the scenes. That's what makes its after-hours move so interesting. Shares shot up 51%, with a whopping 75% breakout during the session. It's the kind of move that raises eyebrows, especially because there hasn't been any obvious news or press release tied to the jump. No earnings drop, no new deal announcement, nothing concrete to hang the price action on. When that happens, it often points to either a low-float stock catching fire or traders piling in on technical momentum. After-hours trading can get volatile fast, and that kind of environment is ripe for big percentage swings, both up and down. From a long-term investor perspective, this is one of those times where it's smart to be intrigued, but cautious. If this breakout ends up being backed by real substance, like expansion into a new market or a major partnership, it could signal a new chapter for the company. But until we get clarity, there's just as much chance this cools off just as quickly. Either way, it's definitely worth keeping Galaxy Payroll on the radar in the short term to see how it plays out once the regular session opens and volume picks up. Our review on SOBR. SOBR Safe Incorporated is a tech company working to modernize alcohol detection, specifically in a non-invasive, real-time way. Their platform uses transdermal technology, which basically means detecting alcohol through the skin, no breathalyzers or blood tests involved. They got a stationary product called SOBR Check, which scans your finger to verify identity and alcohol presence, and then there's SOBR Sure, their wearable wristband that monitors alcohol levels continuously while also tracking GPS. It's designed for environments where safety and accountability really matter, like commercial fleets, rehab programs, or even workplaces with strict substance policies. Now, shares of SOBR Safe popped 42% after hours, with a big 55% breakout right near the open of that session. That kind of move tends to catch attention, especially for a small-cap name like this where even modest trading activity can create serious price movement. There wasn't any major news tied to the jump, so it feels more like a momentum wave, possibly driven by traders looking for low-float plays or speculating on upcoming news. What makes this worth watching is that SOBR Safe sits in a niche that's seeing growing interest: real-time monitoring, wearables, workplace safety tech. If there's an uptick in adoption or new contracts in the pipeline, that could support the move. But until we get something solid, it's a little bit of a wait-and-see situation. Could be a spark before a run, or just a quick after-hours pop. Either way, the tech has a real-world use case, and that's not something every microcap can say. Definitely one to keep an eye on in the coming sessions. Our review on SPIR. Spire Global Incorporated is a space-based data and analytics company that's building out the kind of infrastructure you don't really think about, but once you do, it's impressive. They design, build, and operate their own satellites and ground stations, giving them full control over a constellation that tracks global ship movements, aircraft, and even delivers AI-powered weather insights. Whether it's maritime, aviation, or climate data, Spire's platform is like the invisible engine behind a lot of critical real-time decisions around the world. Now, after hours, Spire shares spiked 35%, with a breakout move right near the open of the session, up 30% fast and holding strong. The driver? Spire just reached a litigation resolution tied to the previously announced sale of its maritime business to KPLR. This deal had been stuck in legal limbo for months after KPLR dragged its feet on closing. Spire had taken them to court, aiming to force the deal through, and now both parties have agreed to resolve the case, pending a successful close by April 25th or April 30th at the latest. For investors, this is a big relief moment. That maritime sale was likely factored into Spire's strategic and financial outlook, and the litigation cloud created a lot of uncertainty. Resolving it potentially frees up capital, clarifies their focus going forward, and helps remove the legal overhang that may have weighed on the stock. The after-hours action is telling. This wasn't just a knee-jerk move. It's one of those rare legal updates that actually opens the door for a cleaner growth narrative. We'll see if the momentum holds through the week, but for now, it's a meaningful win that puts Spire back on track. Our review on PCRX. Pacira BioSciences Incorporated is a biotech company that's really making waves in the non-opioid pain management space. They've got a solid portfolio with products like Payroll, which is a long-acting injectable bupivacaine designed to manage post-surgical pain, Zilretta, which targets knee pain caused by osteoarthritis, and Iavra, a handheld device that uses cold therapy for immediate pain relief. On top of that, they're working on PCRX 201, a gene therapy aimed at treating osteoarthritis. Now, here's the interesting update. Pacira's stock jumped 22% after hours, and that's thanks to a settlement with Fresenius Kabi. The settlement resolves ongoing patent disputes over Payroll and paves the way for Fresenius to sell a generic version of it. The catch? They can only sell limited quantities starting in 2030, but full-scale sales are allowed from 2039 onward. As part of the deal, Pacira is paying $7 million to Fresenius. While the prospect of a generic competitor isn't exactly great news, the good part is that Pacira still gets nearly 5 more years of exclusivity for Payroll, which gives them some solid growth runway. The market seems to have taken this news well, with the stock reacting positively, likely because the legal uncertainty is cleared up, and investors are now looking forward to Pacira focusing more on expanding its other products and pipeline. With that clarity, there's a bit more confidence in what's next for the company. Our review on ATCH. AtlasClear Holdings Incorporated is a tech-forward financial services company that's quietly building something pretty ambitious. Their main focus is on providing a B2B platform that covers everything from trading and clearing to settlement and banking, all tailored for small to mid-sized financial firms that often get overlooked by the bigger players. Think hedge funds, pension plans, boutique brokerages, and family offices that need a more flexible, integrated solution. They also offer full-service correspondent brokerage through Wilson Davis & Company, which adds a hands-on service layer to their tech stack. Now, let's talk about the stock move. Shares of AtlasClear popped 21%, and while there wasn't a single flashy headline driving it, this kind of action usually hints at growing investor confidence or whispers of something brewing under the surface, whether that's operational momentum, new client traction, or just renewed attention in the fintech space. For a company that's all about building a fully integrated platform in a market niche with plenty of demand but limited options, this could be a signal that investors are starting to catch on. It's definitely one to keep on the radar, especially if they keep showing signs of progress in scaling their services and carving out space in the underserved mid-market financial segment. Please subscribe, give the video a like, and watch more from our playlist. Thanks.